Happy Monday, everybody. I hope you had a great weekend. I told you last Monday that the week was going to be a big one, and it did not let us down. Earnings, Fed, inflation, jobs, tariff, and even some surprises. Now, today is August 4th, 2025, and this is your Monday market update. Markets opened the week last Monday on an upbeat note after a long awaited US EU trade agreement eased concerns over spiraling protectionism. Energy provisions and tariff limits gave the market a reason to rally at the open. Once again, there were few details or full statements from the trade deal and no major eco data. Add that to the traders bracing for the Fed meeting and the tech earnings later in the week. Momentum did fade. Profit taking set in by early afternoon and continued into the close. The Dow closed down a quarter of 1%, S&P flat for the day, and the Nasdaq was up just a quarter of 1%. Tuesday brought encouraging eco news, cooling housing inflation, while JOLTS job openings report remained above 7 million jobs, consistent with this soft landing narrative. Yet markets traded with a heavy tone as Treasury yields dropped and the IMF comments raised the specter of inflation risks. Strong 7-year Treasury auction poured some cold water on a midday rebound, and the hawkish trade rhetoric from the Trump administration soured the mood into the close. The Dow was down half of 1%, S&P down a quarter of 1%, and the Nasdaq was down a quarter of 1% also. Wednesday, all eyes were on the Fed. The central bank held rates steady, of course, as everyone expected, and tweaked its statement to say growth had, quote unquote, moderated. With two members dissenting in favor of a cut, that's the first double dissent since 1993. Markets initially welcomed the move, but during the press conference, Chair Powell emphasized a wait-and-see stance, disappointing those hoping for a clearer guidance on a September cut. A brief rally reversed by the final hour. The Dow was down again, half of 1%, S&P down a quarter of 1%, and the Nasdaq was also down a quarter of 1%. Thursday started hot. Microsoft and Meta delivered huge earnings surprises, pushing futures sharply higher, but a warmer than expected core PCE reading that was at 2.8% year over year, and the Fed mouthpiece, Nick Timiraos from the Wall Street Journal, warning about quote unquote worsening inflation that dampened hopes for rate cuts. A brief market bounce followed Trump's announcement of a 90-day tariff extension with Mexico, but that was undercut when the White House confirmed tariffs would begin as planned the next day. The Dow down 0.75%, S&P down half of 1%, and the Nasdaq was down a half of 1%. Friday was rough. July's payroll report came in well below expectations at just 73,000 jobs, with major downward revisions to May and June. About a quarter of a million jobs was down. The downward revisions. This was big news as those prior month's numbers were big adjustments, and that got someone's eye. Want to guess who? More on that to come. That news, paired with the activation of the new U.S. tariffs, set off a broad risk-off move. Tech led the decline, with the Nasdaq logging its worst day since May. Treasury yields sank as markets repriced expectations for the Fed easing. The Dow was down 1.25%, S&P down 1.5%, and the Nasdaq was down 2.25%. Before we go too far away from the jobs number, yes, as the jobs number revisions were large, the president, for good or for bad, I have no political bias here, just want to report the facts, was unhappy with the message and the messenger. The weekend rolled in with President Trump ordering the firing of the head of the Labor Department responsible for the numbers. This was somewhat of a surprise, so we'll see how it plays out. It did not get as much ink as I thought it would over the weekend, but we're talking about it today, so we'll see how things go. For the week, the market dropped across the board as macro headwinds overpowered the stellar earnings. The Dow was down 2.75%, S&P down 2.5%, the Nasdaq down 2.25%. Despite strong beats from Microsoft, Meta, Amazon, and Apple, markets could not ignore the soft labor data, sticky inflation, and new tariff implementations. Bond yields fell, volatility rose, and the soft landing narrative took a hit. Let's look at the week ahead. This week brings a new test. Can the next wave of earnings plus a critical services report revive market confidence? We're going to find out. A few earnings highlights coming up. Monday, Palantir, Tuesday, AMD, Caterpillar, Pfizer, Amgen. Wednesday, Disney, McDonald's, Uber, Novo Nordisk. Thursday, Eli Lilly, Constellation Energy. Friday, Wendy's, Under Armour. All over the sectors, we're going to see what the narrative is. Most will be looking for earnings, tariff effects, and guidance. The guidance, in my opinion, is what markets seem to keep focusing on. I do maintain that in the short term, with things changing as often as quickly as they are, guidance is cloudy. And we've seen some companies actually withdraw guidance. FedEx did that last week, and it did not go over well. Markets will watch whether all the AI names, Palantir and AMD and Shopify, can they extend their tech rally? And whether bellwether consumer names like McDonald's and Disney, do they show strength or do they show signs of slowing demand, especially on the consumer side? Eco data will be less, as is mostly the case in a week following the big jobs report. Nothing much today. Tuesday, we'll get ISM Services Index, S&P Global Services PMI. Thursday, we'll get jobless claims, productivity, labor costs, consumer credit. There will be an extra focus on the labor market after last week's numbers. Remember, these are weekly high frequency numbers. So we'll also get the return of the Fed heads with Cook and Collins on Wednesday, Bostic on Thursday, and Musalem on Friday. It is notable that Fed Governor Kugler has submitted her resignation and will leave to return to teach at Georgetown. This does open up a seat for the president to nominate and fill. That may keep things interesting. With tariff effects just beginning and Friday's weak job report still fresh, this week could reset market tone and Fed expectations heading into late summer. So far, we're looking up for the day. We'll see how that goes. We are entering a seasonally slower time. As the summer winds down, I'm not expecting that this year, so we'll see. For now, as always, keep your goals in line of sight. This is all noise. It may affect things in the shorter term. Our goals must be met regardless of what the markets do. So we need to keep them front and center. Keep in touch. Check back on Friday for another great planning video. Have a great week.